Hey, what's going on, everyone? I am back. Today is September the 3rd, 2022. We're going to talk about Michael Burry today, the Big Short. He is coming out with some more supposedly dire predictions about the stock market, the economy, the yada yada that you hear so much right now that is running the news, that is running the gambit across so many social media platforms. I am here to assist and help you all out as to how we should be really thinking. All right. So if it's going to occur, if the economy is going to crash, if we're going to hit a recession, the best thing that we can do is get prepared and work our way through this situation without all of the sensationalism, without all of the fear and the buzzwords that so many people try to get us harped on to get us to click. Welcome to my channel. This is HueFin, also known as HueFin News. I conduct and I produce price predictions because I want us to see and how we should think as we endure these uncertainties. You guys want to join me? Hit that like button, share the video, and also subscribe here to my channel. Now, check this out. This is the article right here from the street. It was posted on September the 1st, 2022 with the title, Michael Big Short Burry makes another dire prediction. Okay, we got it. We appreciate everyone's opinion and how they view the markets, because we take all of that into consideration. But if you guys been an avid follower of mine and a subscriber of this particular channel, you know that we certify what people say with the price chart. If Michael Burry and many other proponents are looking for a crash, then guess what? It's going to be revealed on the price chart. We're going to show you all that at the end of this video. Now, let's go through this article real quick. I went through and highlighted a couple of things. You guys can see that the investor, talking about Michael Burry, he recently liquidated his entire portfolio of US stocks. He sold out. Like, the dude said, look, I'm getting out of all of my positions and I'm holding cash except for one stock, just one. Now, he is saying that the worst of the economy is yet to come, as Jerome Powell reiterated on August the 26th that the central bank would continue to raise interest rates aggressively to fight inflation. Prices are going up astronomically, right? And in order for them to bring down prices, they got to raise interest rates. Now, there's a lot of debt flowing around the world, an extreme amount of United States dollar debt. And there's not too many ways out of this situation. Now, he pointed out, Michael Burry pointed out potential red flags for the economy, like this is one of them. This is a red flag that Michael is trying to tell us, like a household debt crisis that pose serious danger. Too many households hold too much debt with presumably no way to pay it down. Think about this. He indicates that a crash is coming, right? Now, this is the household debt, one of the red flags that he's mentioning. The U.S. consumer borrowing increased by, get this, $40.2 billion in June from the prior month. So it doubled. Well, I can't say it doubled, but it increased from May to June in 30 days. $40.2 billion. That's how much the consumers have borrowed, meaning that they have to pay it back. This was the second biggest increase ever, according to data from the Federal Reserve. Remember, the savings glut problem, no more, because the helicopter cash taught people to spend again, and it's very addictive. Winter coming, Burry added. See, during the pandemic, there was a whole lot of cash, whole lot of dollar denominated money created, right? You had stimulus checks, you had PPP loans, and trillions of dollars created from the government of the United States. That money has to be paid back. And people during that time were still consuming. They were still buying the things that they need. And in some cases, some people bought things that they did not need. But now, since that spigot has dried out, no more PPP loans, no more stimulus checks. Now people are borrowing from credit lines, credit cards, taking out other loans because they still have that addictive spending mentality is what Burry's trying to tell us. That's going to come and rear its ugly head. Because if the government is not going to give their citizens no more helicopter cash, just throw money out and give people money so that they can continue to spend, so that the economy can continually churn, it's going to come to a screeching halt. This is what Burry's trying to prepare us for. Because the United States cannot continually print money. So now let's go down a little bit further. And yet, he tweeted this out, Michael Burry. You guys can see that the tweet is right here. And yet I keep getting asked when crash. Burry tweeted on August the 31st with a Bloomberg chart showing the movements of the S&P 500 since 2017. Now you look at the chart for yourself. When the crash, why would people continue to ask you that question when you can clearly see that beginning of the year is when the crash started, is what he's trying to tell us. He's giving us an example. All the way until right here to where, let me see if I can zoom this in. So all the way right here when the pandemic started, that was a crash. Government infused the economy with trillions of dollars in debt. Market went up. Now we're coming back down again. We're in another crash is what Burry's trying to insinuate. Now, just like the government created money out of nowhere, here they will have to do that again in order to allow this market, the economy, to continue to trend higher. Okay? They will have to do that. And until we see that occur, until we see the Fed stop raising interest rates, until we see the Fed stop tightening on the debt that they were taking in, and until the stimulus checks come back, we will continue to see the market, in my opinion, go down. Now, that's not to scare us. It's for us to be prepared, because there will always be monetary opportunities for us to make profit. Understand that. This is not the opportunity to be fearful or scared. This is the opportunity for us to get prepared and be on the continually winning side. We got to follow the money. All right, so check this out. In May, the investor predicted that the S&P 500 could fall to 1,862 points over the following few years based on the crashes of past years. Okay. At last check, the index was around 3,900 points. From there, his call would be a drop of 52% fall. 52%. Okay. The cause of his pessimism is that the greatest speculative bubble of all time in all things has been created since the summer of 2021. Speculative bubble of all time in all things. He's trying to tell us that every asset class is massively overinflated. That's particularly because small investors went heavily into the meme stocks, namely AMC, GameStop. They took those stimulus checks and put it on stocks and cryptocurrencies like Dogecoin and Shiba Inu, pretending the mother of all crashes. Now, some of his tweets that Burry has put on Twitter has garnered a whole lot of comments on social media. You guys can see it right here. Now, some people pointed out that the year has been very bad for the stock market, while others were convinced that a crash was imminent. Okay. There is no reason for a market crash that hasn't been priced in. This is what somebody tweeted in regards to Timmy Barron. Okay. There is no reason for a market crash that hasn't been priced in. This has already been the worst year for the market ever. Unless there is some catalyst market crash event, he is just staying. I guess he's just trying to say sane. This is why Twitter needs that edit button. He is just saying what every TA guru is saying by simply copying the 2008 chart. Okay, so he considered himself a profile name, the volatility king. Here is here. This is what somebody else tweeted in regards to Burry's tweet. Is here, LOL, started in January. So now, what do you think? Let's not think. Let's look at what the people are doing. And we can tell from the price chart. So this is the S&P 500 futures index right here. Okay. Now you guys can see I've already depicted what I'm looking at into the market in the S&P 500, right? I'm already there. So if we continually see price go down, guess what? We won't be nervous. We won't be scared. And Michael Burry will be correct, right? I give kudos to those individuals who are correct in their predictions. He's predicting a mother of all crash. And he said that what was that part of the article saying that he is looking for the market to run down towards 1860. Let's see where we at on the chart here. Okay. Now, that is monumental. Look at this. We could see the market in the S&P 500. He said 1860. Okay. That is 52, almost 53%. Now let's zoom out though, and let's see, why is he saying 1860? Why 1860? All right. You guys can already see it, correct? Let me show it to you. Because 1860 has already created itself as being a support area. Check this out. So he's in all cash, right? He's looking for the market to come down to this particular area here, right? Look at that. Back here in 2014, the S&P 500 index was traded around 1,800 points, and it held support 3 times. 2014 in September, 2015 in August, 2016 in February, and then the market went completely up. Now, don't expect it just to fall down just like a rock. There will be gyrations to where price breaks down. You'll see a small relief rally, market goes up a couple of days, couple of weeks, then it breaks back down. Something like this, right? You'll expect something like this. Okay, that's something that you need to expect. Now, if he's looking for 1860, I mean, that's very doable, right? Anything's possible within the stock market. But we will have to see market break these areas first, okay? Because the market will come in and test all of these areas. And I want to show you where they're at. So that's an area to be tested. This area will be tested. This area will be tested for support. This area possibly will be tested for support. Like, these will be points to where we can see the market stop going down and begin to go back up for a small stint of time before we continue to see it run all the way back down, right? So now, that's it. We are already in position. We are already expecting this thing to play out. We're not going to be surprised. We're not going to be caught off guard. That's why I'm here. It's to give you all the perspective as to from what people say and their opinion, and try to validate it with the price chart. Currently, Michael Burry is on point. We have seen the market in the S&P 500 continually trade below this descending line. That's a dead giveaway to tell us how we should be thinking. Yeah, the S&P 500 is weak. Now, obviously, there's going to be points that we're going to be paying attention to see the market buyers come in. That's what we're on the lookout for right now. You guys can already see where my ultimate TP price is in S&P 500. That's it. You don't have to be scared. You don't have to be nervous. You just have to certify what you're noticing from other people to see if it gels with the price chart. So keep it locked in here, because I will do that for my subscribers. All right, that's it. I'm done. I'm not going to change my price predictions out for the S&P 500. You guys can see I got it for the S&P 500, even for the Dow and the NASDAQ. Okay, so we're already in position looking at the markets on those 3 indexes. Make sure you maintain the profitability and give me your thoughts. I'll talk to you all later.